Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 10th of December, 2022, and this is the weekly technical analysis for spot gold and dollar yen for the second week of December. Let's begin with spot gold, where after a bullish close the previous week, it did attempt to climb up higher but failed, and right on the start of the week it retraced back what it gained on the previous week or the previous Thursday, and then slowly recovered back by the end of the week to reach the 1800 round figure again. So this is proving to be a significant resistance here, along with the also the 162 pip extension of this reversal move. But now it's yes, even though there was some possible clues on what the Federal Reserve is going to do this week, this Wednesday, whether it's going to be a 50 basis points or 75 basis points rate hike. Most have factored in a 50 basis points, but US dollar did not drop too far, and spot gold and the other majors did not capitalize too much. And for spot gold, it's restricted and seems like it's pausing. There was likely profit taking on Monday after hitting the round figure. So now it's probably wait and see till Wednesday to see whether it's going to continue to drive higher or whether it's going to retrace and pull back into the daily 200 or even lower. So for the moment, it probably looks like the daily 200 may offer some support here. And if this is sloping down, this is sloping down here, that could be bounce up here back into this previous must be a swing low here, and that could actually be forming a potential head and shoulders, perhaps a complex head and shoulders formation here, but we'll see if it's going to dip lower or whether it's going to just break out higher on the news. But at the moment, it's possibly forming some lower highs here. So let's draw that in. And let's go back and take a look. Yes, this was a previous swing low here, where it did form a resistance. And it did break through, but then looks like it's oscillating around this previous swing low here. And that's at a 1787 area. So it's midway between the two fips of the 138 and 162. All right, so let's extend this support, intermediate support here. may need to bring this down into the daily 200. And then the next key support at the swing high of this fib, where the daily 55 is. That's going to be the major support. That's where it bounced off from. Okay. And on the top side, the key resistance is still at the 1850 and the 200 fib extension here. But I think we'll move this lower into this trend line. Which is around the 1825 intermediate level between the 1800 and the 1850. Okay, so this week there's a number of US news other than the Federal Reserve, although that's the key one. There's a CPI figure coming out on Tuesday, where the PPI for last week came out better than expected, so that's a bit ominous for the CPI. Then after that, there's also minor news from retail sales and flash PMIs. Okay. Let's compare this with the US dollar index to see how that performed in relation to spot gold and the other majors. Here's the US dollar index, the DXY. And right from the start of the week, it already tested the previous support and bounced off right through from the 104 into the daily 200 EMA by midweek before pulling back and closing probably quite close to the open, although slightly bullish for close, so big spinning top here. And it's probably supported with some potential data from the US PPI, and where it was slightly better than expected. Now it seems to have also formed something inverse to spot gold here with this rising low. And let's see whether this is going to be of significant support for the US dollar, and the key resistance is still at the daily 200. Seems to be forming an ascending triangle now. It does seem to be setting up for probably a bullish move higher. So this intermediate resistance at 105, we'll leave it there for now, but I think we'll move this more significant resistance to the 106 round figure, where if it does break out higher on next week's FOMC rate decision, we'll see whether it's able to punch through the daily 200 and test the 106 or even higher. Okay, on the support side, you still have this key support at 103. And so far, this previous, I think it's a swing high. If we go back far enough, yes, that was from previous swing high, tested twice, form a resistance, and then now becomes support. Okay, so let's see if it's going to consolidate inside this triangle that seems to be forming. Could be a triangle or an ascending triangle as well, with the daily 200 providing the horizontal resistance. But we'll leave it for now as it is, and there could be potential either breakout or breakdown, and targeting the two round figure levels, 106 or 103. I think it's more than likely to break out higher with the rate increase again, and we'll see whether the Fed will give an indication of where it's going to peak at and start to pivot, because this is, if it's at 0.5%, then it's moving up into 4.5%, and we'll see how many more months for next year, whether they're going to continue to keep increasing, and where that terminal rate is going to be. Okay, that's going to be a very critical week next week before the end of the year. And if we look at the I don't want to fit this for now. May just leave this fib as it is, and if it does make a very strong move, the next key resistance is going to be at this swing low, this swing high area we just tested, and that's at the 107.60 area, but I think that's going to be for later. Okay, all right, let's move back to the other major pairs. Let's move on to the dollar against the Japanese yen. It did dip lower, did continue lower to just test the 21 fib retracement area after a bearish close on the previous week. And then, but it managed to straight away climb back up, just like the US dollar index on the Monday, and consolidated through the end of the week. So it's not dipping lower, which is at least good news for the dollar against the Japanese yen, looking better than the DXY. So this intermediate resistance is still there, with the next key resistance up at the 62 fib and the 140 round figure. Major support is lower right down at this previous swing low, just above the 130 round figure. And let's add in an intermediate support now that this has held. All right, so we'll see if this week with the Federal Reserve announcing their rate hike, whether it's 50 or 75 basis points, everyone's pointing to a 50 basis points rate increase, whether it's enough to give the dollar a boost, or whether it's just going to do a quick test and then consolidate. And in fact, we also have potential support at the 135 along with the daily 200 EMA. So we could even squeeze this a bit higher. And add in a support at this 21 fib. Okay. On the weekly time frame, you can see that there was a bullish close for the week, and that's a positive sign for the dollar. Could be a continuation move further up and towards the 140 round figure. So that's the resistance zone up here. All right, so we'll see how much the US dollar is going to move, whether higher or just consolidate once the Federal Reserve makes their decisions and announcement and gives a future indication on their possible stance on where the peak rate is going to be. All right, so do check out my other videos on the other major pairs. Have a safe week and a good trading week, and cheers for now.